Welcome to the Buy to Let Show, the only programme which gives you all the information you need to know whether you are thinking about buy to let for the first time or are an existing investor and landlord. We've already considered buy to let as an investment and how to finance and cover your risks, and this show is all about how to choose a property to invest in. Now, the first thing you need to do before you decide what property to buy is to understand who it is you are likely to let to. When most people think about letting a property, they have in mind 20-somethings who can't afford to buy and have to rent instead. However, this isn't necessarily the majority of tenants. Many tenants are waiting for a council house, are students who need temporary accommodation, or people who are working in an area short-term from overseas or in a city during the week and go home to their country idyll at weekends. With our ageing population, we're also seeing a new trend for our older generation to sell their home and rent near family for part of the year and go abroad somewhere warm during our winter months. If you want to be successful at buy to let, firstly, you need to be clear what financial returns you want, then understand which type of tenant would best suit your plans. Once you know this, it's about identifying which location those tenants would like to live in, and of course, the type of property they want and can afford. Let's take students, for example. In some areas, university and college students may be happy to walk or travel a mile or more to study, whereas in other areas, the location radius may need to be much smaller, such as half a mile. Buy outside of these areas and you may not be able to let to students at all. The other factor to consider is what's in short supply. For some students, it may be house shares for undergraduates, while in other areas, it may be studios and one-bed apartments for postgraduates, visiting lecturers, or overseas students. Unless you understand your financial objectives, match these to a tenant type, and then work out what location and property type tenants want in your investment area, you may struggle to secure the returns you'd hoped for. Now, let's go through some examples of this to help explain it in more detail. Firstly, let's consider how to match a tenant type and property to your financial objectives. Let's take, for example, that you want capital growth. Now, typically, a good tenant to deliver this would be a family that wants to rent long term. Most important to them will be the local schools, followed by leisure facilities and good local amenities. They're likely to want 2, 3-bedroomed houses, or maybe even an executive 5-bed property. However, if your financial objective was income, what you could then look at professional lets or student lets. Now, they are more likely to want a location that's near to their work or to their college or university, and probably something that's walkable, or indeed they can use public transport. And to make this work, you're probably looking at a property that allows you to let 4 or 5 bedrooms. Now, once you have determined the type of tenant and property which will suit your needs, you then need to work out lots more things. For example, what can you actually afford? It might be that you look at buying a new build versus an existing home. You may pay more for the new build initially than you do for the existing home, but remember, you'll save on maintenance costs, certainly for the first 5 years. Next, do you look at buying a flat or do you buy a house? The issue with a flat from a buy-to-let perspective is that you have to pay service charges, ground rent, and actually you're relying on the freeholder, another landlord, to make sure that that property is kept in good condition. Next, are you going to renovate for profit and let out a property to boost your returns? And if you're looking at do that, can you cope without any income coming in for some months? Next, instead of actually waiting for income to come in, you could buy a property already let by another landlord so that you get income from day one of purchase. Or you could go to the other extreme, buy a piece of land, build a property to the spec that you want, and then let that out. Now, if you are considering renting rooms, you may even think about renting spare rooms in your own home, as if you do this, you can earn up to £7,500 tax-free income a year. That can go an awful long way to boosting your annual earnings. Here on the Buy-to-Let Show, we aim to bring you all the information you need to run a successful buy-to-let. You can find more advice and help by following these links. And you can download our special ebook, which goes with the programme.